Yo, what's good, boys? We're back Monday, didn't trade, but we're gonna come do a little back testing video. I was gonna put it in the Discord, but I'd rather just make a vid, get back on it. All the DMs have now been replied to. I'm now back active. Um, yeah, man, we're back. Um, and yeah, we're literally just gonna go over price today. It's obviously on Mondays, it's not really that relevant of price. However, if you did want to trade it, then you could have. Um, so yeah, we'll start on the daily time frame. You can obviously see that we're currently rebalancing price. We did this the other day. Why do I literally struggle to find every time? Did this the other day. Just so you know, this is NAS, this is SPX. If you want to know how to do it, you literally just press that. You ain't got to have like premium or nothing like that. And it syncs to the time frame. But yeah, obviously we mark this. I suppose we can do that. This high, this low. Took out that high. Oh, it's gonna be well annoying. Okay, just focus on that high. We take out that high. This one here. Make a new swing low. Take out the high again. Swing low. Take out the high. Bang. We push past the swing low here. Make a swing high. Make a new swing low. Make a new swing high that breaks past this new swing high. And then we're currently rebalancing price. I think this is the wrong way. Yep. Currently rebalancing price in here. However, 4 hour was very clean. We also saw that Friday closed past Wednesday's low. Reason why Thursday's low is not relevant is because it's an inside bar. We closed past this low right here. Expecting lower prices. Obviously, we got that. Open. No, this is currently where price is. This whole wick up. Obviously, pushed up. And then it's currently making its way back down. So the daily's kind of in both sides. It's playing both with these closes. Past this bullish fair value gap as well, tapping into that. So you can actually keep that there. But yeah, SPX is doing the same thing. However, the only thing about doing the compare thing is there's no magnet on it, so it doesn't lock. So obviously with SPX, it's respecting midpoint of this bullish fair value gap when NAS is not. So NAS is showing more bearish price action. SPX is showing more bullish price action, and that is also going to show. That's going to show. However, we do have two that do line up. We've obviously got NAS inversing this, and then we've also obviously got SPX inversing this as well. However, NAS has just inversed both. SPX has only inversed the top one. This is the extreme. There's no other daily gaps here. So yeah, NAS is way more bearish. SPX is obviously more bullish, and we're going to see that with the price action for today. We'll keep both of them on. Or we can just make lines. Yeah, we'll just make lines. So this is obviously the easier one. And then this is the extreme. Do the same for SPX, which I suppose with the compare thing it doesn't really matter, because you can just put the levels on there. You haven't actually got to draw the box. Oh, does it magnet as well? Oh, it's long. Doesn't even magnet, mate. We can just change it. Like we'll do rough estimates, right? And then we'll do low is 54151. There we go. High is 53721. There we go. I suppose we can't really put a level for the midpoint. We'll just draw a rough line. There. Okay. And then high is 54638. And the low is 55136. Okay, anyways. We've got our levels on there. I suppose we can change this colour. Make it more extreme. But yeah, that's our daily bias for NAS and SPX. We can obviously see that SPX is way more bullish, NAS is way more bearish. And yeah, so we're going to jump onto the 4-hour time frame now. And as we can see, price, well, can't really mark midnight on here, but so it's today's price. You can obviously see that we tap back up into that extreme inverse, so that could be our key level for today. That could have been our key level. We also, and this is where it caught a lot of people off, and it makes sense now that I've said it and gone over why NAS is more bearish and ES is more bullish. If we look at this order block right here, obviously we've got our key level right there. We tap straight back in. But if we look at this body open of this bearish order block, we can see we did not tap it. However, if we look at SPX, we can see we tap it, confirming our SPX is more bullish, NAS is more bearish bias. So we can then mark our 4-hour SMT at this body open here, this body open to here. So we've already got a bearish signature in price. We've obviously also got this fair value gap right here. So we've got a bearish fair value gap with a inverse gap. This is the higher up gap. So we've got a, let's count our confluences. We've got a daily gap, that's 1. We've got a 4-hour gap, that's 2. We've got a 4-hour SMT, that's free, and that's before we've even looked for an entry model and applied time. So obviously we can obviously see it now, but that's free higher time frame confluences. So realistically I could have entered on a lower time frame just off this SMT alone. So yeah, we're on the 4-hour now. We can go to the 1-hour time frame. So when we start seeing our time opens, we can get rid of this line now, or we can put it to midnight. So as you can see, on the hourly time frame, we push up into our bearish gap, into our SMT, right there. So as you can see, NAS did not reach into this order block, SPX did. So the weaker pair is NAS with a bearish bias already. 30 minutes, same thing. We're just seeing more opens now. Daily open, bang, pushed up. 8:30, we got a Judas swing up, getting our SMT. 9:30 open, but Judas swing up. 10 o'clock, 4-hour candle open up, getting our Judas swing with the SMT. We could have been trading any of these. 15, I mean, it's same as the 30 really. And the 5. So obviously how I like to trade the 4-hour candle open power of 3. So this also would have applied to, I mean, this is already CRT, but CRT there, and there isn't anything else majorly. But yeah, I can't really see any CRT here, unless you do want to count this micro right there, because that would obviously be the main. This is the manipulation candle, so we can mark that as well, and go on to the 5. So confluences 10 o'clock. Even if you traded 8:30, really, if we pushed up at 8:30 and we saw that we tapped into here 10 past 10, well, even at 9:30, really, the move didn't happen until we pushed up into here. There was no real bearish move, because the key level, inside the key level, would have been the order block fair value gap. Obviously we get the SMT on the order block with SPX. There's our trade. As soon as we get that, we're good. We'll go on to the lower time frames again, but as you can see, our key level is being respected by the bodies. That is the extreme inverse from the daily. Do you remember? The extreme inverse, so now it's being used as support. So that's another confluence. 10 o'clock comes around on the 5-minute chart, gives us a fake move lower, then goes taps into this tiny order block right there. We then push up right here, tapping into our daily key level. This would have been our major key level anyways. We then got our SMT right there, just really showing this is the move. SPX taps into the minor with a less extreme inverse. At the time, NAS taps into the extreme inverse, which also taps into the order block, which NAS does not. So 10 o'clock, realistically, as soon as you get this candle print, this candle prints the SMT, you could have been short bias on the move up, the tiny move up. You could have honestly had your stop there. 18 ticks, and you could have targeted 8:30 low, could have targeted, where's London low, could have targeted London low right there, 8R right there, bang, let me put that on, just like that. As soon as that candle prints, giving you the SMT, it's go time. We'll go onto the 1 minute chart now. So as you can see, 10 o'clock opens. This is where I like to trade. We got our tap. This is our mini fake Judas swing here. People would have classed this as a break of structure, and then they would have got stopped straight out. They probably had their limits on this gap here. So anyone trading that, not knowing the high time frame narrative, would have been smoked. Anyone not knowing the SMT would have been smoked. So yeah, my model relies around 10 o'clock open. It's the next 4-hour candle. So as you can see, we obviously get that. It's also half an hour after New York open, which is perfect for me because half an hour is usually you got 15 minutes to accumulate. Think about the quarterly theory, 15 minutes to accumulate orders. So there's 4 15s in an hour. If you think about 9:30, you've got the 15-minute accumulate, 15-minute manipulate basis. But we just accumulate here. We could have had an easy power free trade if that's just how you look. I know I trade PO3, but if you're strictly just a PO3 trader, this would have been like clockwork, tapping into many key levels everywhere for that distribution down to midnight open. Clockwork. Bang. That's the easiest PO3 trade you'll ever get in your life. But I'll put that here, put it on a thumbnail or something. So yeah, anyways, let me divert from that. Obviously you got 10 o'clock open, we come down, fake Judas swing, push up into our key level now. Why would we not be bullish? Because we've got all of our bias plus 10 o'clock open. Why would we not care about this move down? Why would we not see this as the open high to be low, close? Because this move, open, low, why is this not relevant? It didn't suit this low, even though it's minor, very minor. You would have wanted this low to be suited because of all the orders. But this fake move down is not going to be open, low, high, close. It was technically open, low, high, low, and then close out. The reason this is not valid is strictly because this did not tap a key level. Plus, we already know Nas is more bearish. So yeah, we have this move up, tapping into our key level. That's the main thing. We tapped into our key level at 10 AM open. We then get our SMT for even more confluence. And where could our entry be? Well, as soon as you get the SMT, really, it could be our entry up with this mini power 3 there, open high. You could be in at the open high. Other entries you could have had. We don't really need to see this anymore. Could have had, obviously, we've got this easy inverse right here. It does not return, but yeah, we had this gap here, does not return because we get full displacement through it. Where would our entry be? Well, we can use this order block right here. That's the body threshold right there. Bang. Or you could have been in after we closed past this thick up close candle. Could have market executed on the open high. There's a lot of ways we could have got in, but the main reason for this move is this SMT. If we did not get this SMT, we would have probably got a nice breakdown, retest, move. Reason being, we got this big nice SMT. There was no real need for it to directly rebalance. But yeah, we can just look on any of these time frames. Really, we could have used this gap. Remember, wicks are gaps. As soon as we close past that, we're in. Could have used this. No, we didn't tap it on here, but this is on a forex.com broker. If it would have been on CME, I guarantee that would have got tapped. We could have just used the wick of that breaker. Anything, up to you. Realistically, my entry would have liked to have been a bit inverse, but it was not needed. We got a major SMT at multiple daily time frame key levels and 4 hour time frame key levels. This trade would have been good as gold to get in. Let's have a look at SPX, see what entries that there would have been. So we get an SMT right there. You could have open high, stop loss can be there. Let's see, we got this inverse gap. Does it get touched? It's already inversed, so we can see this part of the gap has not been touched. We then close down, tap back in and run. However, difference is it's not going to show us the levels, but that's midnight open, right? SPX is more bullish, so it doesn't come all the way down to this level. As you can see with NAS, it creates the full open, high, low, close back in the range. We can measure that 50% of the range, clockwork. So yeah, SPX gave better entries. Why? Because it was more bullish, so it's a bit slower. This was fast. This was timed to perfection. Could have used this inverse gap. Could have used this OB, because as you can see, that's a black candle. Could have been hesitant, but thick, up close, close past, back in, bang. Yeah, the entries was really up to you, but this was the higher time frame bias. But yeah, I'll see you guys in a bit. The next video, I think we will talk about Romeo and ICT. I'll come with notes and stuff. But yeah, I'll see you guys in a bit, and peace.